Hey everyone, welcome to the world of smart investing. Ever wondered how to safeguard your investments against market volatility? Today we're diving into the magic of diversification. Picture this, you're at a farmer's market and you've got a dozen eggs. Instead of putting them all in one basket, you spread them out into several. That way, if one basket falls, you've still got eggs left. That's diversification in a nutshell. In financial terms, diversification is about spreading your investments across various asset classes like stocks, bonds, and real estate. It's about not just putting your money in different places, but in the right kinds of places. This strategy can soften the blow if one sector of the market takes a hit, so instead of risking it all on the roll of a single dice, you're placing calculated bets on multiple numbers. So, ready to weave your financial safety net? First things first, it's crucial to understand your risk appetite. Picture yourself at an amusement park. Are you the one lining up for the biggest, fastest roller coaster, or do you prefer the gentle, predictable Ferris wheel? Your answer to that question can tell you a lot about your risk appetite in the world of investing. If you're a thrill seeker, you might not mind taking higher risks for potentially greater returns. You're the roller coaster rider, ready to take on the highs and lows of the market. On the other hand, if you prefer a steady, more predictable ride, you're more risk-averse, opting for safer investments that offer steady returns. It's like choosing between a spicy, exotic dish or a comforting, familiar meal. Neither is right or wrong, it's about what suits your palate, or in this case, your financial goals and comfort with risk. With your risk appetite in mind, you're ready to start building your portfolio. Now it's time to choose your asset classes. Think of these asset classes as the ingredients that will spice up your investment stew. First, we have stocks. The potatoes of your stew, if you will. They're a staple, providing potential for long-term growth. But just like potatoes can be mashed, fried, or baked, stocks too come in different flavors: large cap, mid cap, small cap, international, domestic, offering a smorgasbord of opportunities. Next up, we have bonds, the carrots of your stew. They may not be as exciting as stocks, but they provide stability and income, balancing out the volatility of your stocks. Government bonds, corporate bonds, municipal bonds, each has its unique taste to add to your stew. And then we have the real estate, the meat perhaps. It's tangible, it's substantial, and it adds some hearty goodness to your portfolio. Whether it's a rental property or a real estate investment trust, it's another layer of diversification. But here's the kicker. Just as a stew needs more than one potato, one carrot, and one piece of meat, your portfolio needs more than one stock, one bond, and one real estate investment. You've got to spread your investments within each class. Different sectors, different industries, different regions. Diversity is the name of the game. Remember, a diversified portfolio isn't just about having different asset classes, but also about spreading investments within each class. So go ahead, mix up that stew, and let the flavors of diversification simmer to perfection. Scene script. Diversification doesn't stop at the asset class level. It goes deeper. Now that we've chosen our asset classes, it's time to paint with finer strokes. Imagine each asset class as a jungle. There's a lot of variety within, and you want to sample a bit of everything. In the stock market jungle, for instance, don't just stick to tech stocks. Venture into healthcare, finance, and other sectors. It's like creating a colorful mosaic of investments, each piece contributing to the overall picture. The same goes for bonds and real estate. Mix up government and corporate bonds. Consider different types of real estate. Residential, commercial, even a dash of industrial for zest. The key is to spread your investments across different sectors, industries, and yes, even countries. The world is your oyster, so don't limit your pearls to one shell. Now let's talk wildcards. These are the exotic creatures of the investment jungle, commodities and cryptocurrencies. They can add a thrill to your portfolio, but remember, they're unpredictable. Approach them with a sense of adventure, but also caution. They're the chili flakes on your pizza, not the whole pie. Like a well-seasoned dish, your portfolio should be balanced. Over time, some investments will rise, others may fall. That's natural. The trick is to rebalance your portfolio periodically, keeping it aligned with your goals and risk tolerance. But beware of hidden fees. They're like termites nibbling away at your returns. Always choose transparent investment options and keep those pesky fees at bay. Balance and transparency are your best friends in the world of investing. Imagine your diversified portfolio as a well-tuned orchestra. Each instrument or investment plays its own tune, but together they create a harmonious symphony. Over time, however, some instruments may play louder, overshadowing the others. That's when you step in as the conductor, rebalancing the orchestra to restore harmony. Similarly, in your portfolio, some investments may outperform, skewing the balance. Regular rebalancing ensures that your portfolio stays aligned with your risk tolerance and financial goals. Now let's talk transparency. Just as you wouldn't buy a car with hidden faults, don't opt for investments with hidden fees. These fees are like termites, quietly eating away at your returns. Be vigilant. Choose investment options that are upfront about their costs. Remember, in the world of investing, knowledge is power and transparency is key. With balance and transparency, you're well on your way to building a diversified portfolio. And there you have it, diversification demystified. Let's do a quick recap. We've learned that diversification is like an insurance policy for your portfolio, spreading your investments across different asset classes to mitigate risk. It's about knowing your risk appetite and building a balanced portfolio with a mix of stocks, bonds, and real estate. But remember, diversification doesn't stop there. Go deeper and spread your investments across different sectors, industries, and even countries. And don't forget those wild cards, commodities, and cryptocurrencies can add that extra zing to your portfolio. Keep it balanced, rebalance periodically, and avoid hidden fees like they're gremlins. Remember, diversification isn't magic, but it's a powerful tool. So start building your diversified portfolio today and secure your financial future. And if you found this video helpful, don't forget to subscribe for more.